Hello, everyone. Welcome, welcome, welcome. So today it's a very big day, as you already know. I'm gonna just zoom in myself. So it's a very, very big day. It's a very big event. It's gonna be very exciting today, actually, for everyone. I don't know. I guess you're very, very busy waiting for the data. It's such an anticipated event. A lot of uncertainty around this event, a lot of uncertainty around the inflation on Thursday, of course. So a lot of volatility is expected. Okay, I'm highlighting this. A lot of volatility is expected. So if you have set any pending orders, you're planning in general to trade or invest today, please, 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 risk management, apply your risk management strategy, and for sure, place a stop loss and a target level just to limit any losses because the volatility could easily lead, as you know, to massive losses. So please, 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 it's expected to be a very volatile day ahead. So take care, okay? Risk management first of all, on top of everything. So before we go through the charts, it's NFP, right? Double NFP. That's why the markets are so stressed today, right? That's why we have seen, for example, we have seen dollar actually a bit uncertain, steady. It's low. It's under pressure in general. It's in a bearish outlook in general. I'm gonna share my screen as well. But in general, but today, this is an S&P 500. Sorry for that. I'm gonna zoom in a bit, and I need to share on the bottom what I'm showing. Captions. That's the NASDAQ. That's the S&P 500. Sorry, my bad. So we have seen dollar, a huge uncertainty, sell-off overnight mostly, and on Monday overnight to the global stock markets, Asia stock markets, US indices, everything were in the sell-off. Until, however, this morning, once the European market opened, we have seen that it tried. For example, I have S&P 500 over here. We have seen a bit of a recovery, as you can see, slight, not, I mean, for sure, it has not retraced the losses that we have seen since yesterday. But this rebound, let's call it, is just on the anticipation of the data. So, as I have stated in my article this morning, okay? I don't know how many of you are reading our articles, but this morning I clearly stated that bad news is good news today, okay? What that's supposed to mean? Bad news, I repeat, bad news is good news today. This means that the markets want the NFP to provide a weak release, to provide, to show weakness. Why is that? Simply because this will support further rate cuts, and actually will confirm, not support further rate cuts, will support the scenario of a rate cut, of the next rate cut for the Fed, okay? So that's why we're saying good is back to, bad is good today, okay? And we have seen it actually from the response so far of the financial markets, from indices, dollar, oil, gold as well. We have seen some safe haven demand. So here is dollar, by the way, 4 days in a row on the downside. If I just zoom in into the 1 hour, you can clearly see that it's trending lower, okay? But we have a very important support. Sorry, let me just show you a very important support. That's US oil. Where is my where's my dollar index? Here we go, dollar index as well. Here we go on the downside. A very, very important, right now is retesting a very important support level, okay? A support level that has been seen back on in the mid of October, okay? But you can see down, gap down, a bit dodgy, but sell-off has started today, just earlier actually. You see, it was consolidating the whole morning, and as we're getting closer and closer to the data and to the US Open, we have finally seen the break over the very first immediate support level. So good is back, bad is good. This is what we are expecting today. Weak job data today will, first of all, confirm what it was uncertain so far, and I'm referring to the next rate cut, and also will lead to more rate cuts. Okay, so how this could affect the markets? Obviously, dollar has a negative correlation with rate cuts, right? So dollar will depreciate even more. It's already down. That's the daily. Let me put dollar. Here we go. Dollar is already down. You see, I mean, for November, the whole November and December so far has been on the downside, already returned to October's territory. If I zoom out further, you're going to see that a break of the 97 territory, actually 97.50 territory to be more precise, could open the doors to 96 and 95 level, which is far away. So already bearish, rate cuts, basically anything that that hints that the Fed has the room to cut further, to tight further the monetary policy. This has a negative effect on dollar. It weighs on the dollar. On the flip side, though, that's positive for the stocks. Okay, so have this in mind. The stocks will be supported if we have a weak number today. Why? Simply because weak number implies to rate cuts, and rate cuts implies to less expenses for the big boys, for the big companies, the global companies. And that's why it's positive for the corporate sector. And that's why it could support US indices as well. Okay, that's why we said bad is good today. Okay, obviously we have another uncertainty in front of us. We have the inflation on Thursday. Okay, but today's reading will be enough to clarify the increase of the rate cuts for the Fed, and could give an indication basically for the inflation as well. But whether it's gonna get we are like towards I'm not gonna call it a recession, whether we have avoided a recession. This is how I'm gonna state it. So yeah, cooling of labor market, let's call it. It means rate cuts, means bullish stocks, means bearish dollar, and that's why this has a consequence to support also gold, Bitcoin, in general safe havens. So we have seen it. What we have seen so far today, by the way, is clearly the markets pricing in already a weak number. But let's wait and see. So what else I want? Let me see the chat though, because I can see that there are a lot of questions already. We have another 8 minutes to go until the data is out. Okay. So let me just see the questions. Okay. Okay. Hello, everyone. Hello, Connect the Empire. Let me just. I can see that something is wrong. So. Okay, we're good to go. We're good to continue. So as I was saying, yeah, anything you need today, please don't hesitate to put a comment on the comment box below. I mean, I can see your comments and reply on spot. Feel free to ask me for anything you need, basically fundamental, technical analysis, anything. And if you want me to analyze a specific asset, I would appreciate to let me know the time frame that you want me to analyze as well, because this is helpful. Obviously, we're gonna try at least to go through everything. But yeah, that would be helpful. So 5 minutes to go. Perfect. Okay, so that allows me to explain a bit why NFP buy or sell. I cannot advise, but at least tell me which asset you are asking, for which asset you are asking, guys. I mean, to buy what? To buy what and sell what? At least that. What I can tell you for sure is that the week number for but what asset? So sorry, what asset? You mean the S&P that I'm showing right now, or the NASDAQ, or the dollar, or what do you mean? So for sure, a weak number today, as I stated earlier, is expected to support the stock market. Okay. You know, however, that during an NFP release, we see a lot of market noise the very first 15 to 30 minutes the maximum, but the very first 15 are the critical ones. And the actual direction will be clear 15 minutes after. So put your pending orders, put your alerts. Okay, depends on your strategy, but yeah, week number today is expected to be positive for stocks, negative for dollar, and positive for gold and cryptos as well. Let's see gold as well. Everyone is asking about gold. No, I have actually cable, euro dollar in a 15 minutes chart. I think your questions have been they were a bit delayed, unless if you have just joined our streaming. So okay, pound yen, pound dollar. Okay, I'm gonna save all these comments because we need to go through it one by one. We need to see all these assets that you placed one by one. So I'm gonna start with gold because the majority over here wants gold. Here is my gold. I have, as you know, if you're following us and you have seen my lives before, you have noticed that I'm using several templates. So I'm gonna use my standard one, which is for intraday. I mean, daily to 1 hour chart, and I'm gonna check also 30 minutes chart, but I'm gonna also cross check with high Kenashi. So I'm gonna flip between one template to the other. If you are confused or anything, please don't hesitate to let me know. So I'm gonna place the headline below just to make sure that everyone here knows what I'm covering. This is gold. I have just changed it. Okay, here we have gold. So, my dear friends, as you already probably have seen basically on your charts, okay, in general, gold holds at record highs. This is well expected. It sustains the gains that we have seen so far these years, and the reason is uncertainty. coming from NFP, coming from the US shutdown initially, coming from the delayed data, coming from the inflation, uncertainty around inflation, uncertainty around what the Fed is expected to do next, coming from the tariffs, foreign politics in general. So a lot of uncertainty implies to rallies on safe havens. And obviously gold. That's why gold has sustained its value and it has kept itself at record high so far. Okay, so in general we are still holding our record highs. The momentum in a daily basis in the medium term is quite decent, it's positive, but well below the highs that we have seen in October, right? So however, what matters is what we're gonna see today. So we have seen a bit of a rebound the last hour, back to 4300s. That's the 1 hour chart. I repeat, 1 hour chart. Okay. But what triggered my attention is the fact that momentum is negative. Okay. If I zoom out a bit, you're gonna see that it's far away from zero if we compare it to previous when we can see like on the 20th that also turned negative, on the beginning of December that also turned negative. So this is a bit, it looks way far, even in a in the distance from zero basically is it looks bigger, and it gives the impression that that there is further room on the downside. However, this doesn't mean anything because we are just a minute before the data will be out right now, guys. Let me just I'm gonna put the 15 minutes chart. This is a 15 minutes chart just to see the data. 40. So a weak number today should support the gold, guys. And I see that there is also already some support, but the data are out right now, and massive. Wait a minute. Okay, a decent bit. 64,000 new jobs from the 50,000 expected. Not a very aggressive number, not a very aggressive bit of the data, but still it beat the data. However, let's see, average hourly earnings decline. Oh my God, and it declined significantly, 0.1%. Unemployment increased. Okay, these guys are enough to claim that the NFP today is weak. Okay, why? Unemployment rose, average hourly earnings decline, regardless of the fact that NFP has beat expectations. Unfortunately, or fortunately, depends from the perspective of each one of us, the report as such indicates weakness in the labor in the labor section in the United States. This looks enough to support a rate cut. So we should see, what we expect to see is support on gold, decline on dollar, and support on stocks as well. Okay, there is not a significant volatility right now. This is the 15 minutes chart. I'm gonna put the 5 minutes chart as well. Markets are still trying to understand the report. But what I can say from my perspective is that the fact that unemployment increased, so more jobless people, and the average hourly earnings detracted, which means people are getting less, are paid less. These are enough to claim today's release as a weak release, as a weakness sign into the labor sector of United States. So gold on the announcement of NFP is looking higher. Already we are just 3 minutes after the data. It's already keep pushing higher. Bulls are keep pushing higher. So my dear friends, for anyone that you're trading, I guess, gold, and I know that you're trading gold, we are already a breath away from the this immediate resistance level, this double fractal resistance. But considering how big this candle could get, that it's unlikely to be sustained. I can see also a nice a really sharp slope pointing on the upside on my moving averages, on my short-term moving averages. Stochastic doesn't look ready to return lower, okay? RSI points upwards. So after 43.20 territory, the next ceiling for gold is at record highs at 43, 45, 50 territory. So have this in mind, because this looks to be well supported by the bulls and in line with the report. This is a reaction in line with the report. And I need to state that because this is not always the case, okay? Obviously, okay, it looks a bit overbought, but okay, we might see a bit of like trying to correct somehow. But yeah, the report is bullish for gold. So I'm gonna return back to gold in a bit. Let's see how dollar reacted. So let's put the 5 minutes chart for dollar as well. Okay, on the announcement, this is the 5 minutes chart. Okay, on the announcement, we have a gap basically. I'm gonna put the 1 hour, the 1 minute chart. Okay, let me change. Dollar. Where's my dollar? US index. US dollar safe. Okay, here we go. Sorry guys, I'm gonna come back to the chat, but allow me to say a few stuff. Okay, so this is a 1 minute chart. Are you following? 1 minute chart. On the announcement, we have a huge gap down. Okay. Bizarrely, 1, 2, 3, 4, 5. In the last 5 minutes, bulls tried to push the price higher, but this is not in line with the report. So the report states clearly a weakness in labor data. So that indicates rate cuts. So guys, regardless of this 3-4 minutes appreciation of dollar, from fundamental perspective, dollar should actually the data weighed further on the dollar. Okay, so this bullishness that we have seen the past 5 minutes is expected to be really limited. So keep an eye on either you have done a pivot point analysis, use your pivot point analysis. If you're just poorly doing a price action, just stick a line on the latest low, which is the 97.50, and that indicates that a break of that level, a confirmed break, and a return below that level could indicate another attempt on the downside for dollar. Dollar basically could get into a free fall. Okay, because okay, it has already covered this gap up. And I have put the daily just to show you where we stand. We have already covered this gap up that we have seen in September. Okay, so now basically a breakout of 97.50, so seeing an actual candle closing below 97.50 could open the doors to 97 round number, and actually 96.90 to sign 97. Basically, it's a round number, but also it's an area that it used to be a nice support level the whole July and August. Okay, so that's our immediate support level in case we see 97.50 being rejected. And anyway, you can see momentum, pointing on the RSI on the downside. If I use my Heikin-Nash, it's actually, let's see the Heikin-Nash template as well, because it's very useful for intraday, for scalping and intraday trading, and in general for anyone that is likes to trade in a 5 minutes, 15 minutes, 30 minutes chart. So my Heikin-Nash, here we go. Red, one direction, guys. MACD is negative. This is dollar. I repeat, dollar. 15 minutes chart in this case. I'm just trying to cover everything. So all moving average pointing lower. Parabolic SAR is negative. Consecutive bearish candles. No tail at the top. Everything indicates that the decline persists. Okay, so I'm gonna go higher on the 1 hour chart just to see whether this scenario and this outlook holds for all our time frames. I think it's quite crystal clear. Okay, the momentum here is weaker, but it's still negative. Okay, so, and let's go. Oh, sorry. By the way, very useful would be, okay, it has already broken. So it's very useful in these cases to use Fibonacci. Sorry, wrong. Where is it? Just use it. Where is it? For God's sake, where is my Fibonacci, the triangle one? Oops, here we go. Okay. To use, let me correct it, sorry. To use Fibonacci extensions. Okay, broken, and breach. So that doesn't help us. But what it does help is if I place the particular Fibonacci extension into the daily chart. Okay, if you were following us, I repeat, if you were following us, you have seen our telegrams, our articles. We have done analysis on dollar. We had clearly see for the 2 weeks ago, more than 2 weeks ago, that the dollar could get as low as 96 level. So here we are. 98 was rejected, which was the 161 Fibonacci level. 97.70, which is the previous swing low back in October, already rejected, already broken. So that leaves the next key support level to 261 Fibonacci extension, which is down to 96.80 level. Remember, 96.80 level, which coincides also with July's support. Okay, I'm gonna keep these lines on. Okay, this is just the daily, just to have in mind. But momentum turned negative, all moving average pointing lower, parabolic SAR points lower. Now, I'm going to go back. I know I'm going back and forth. Sorry for that. I'm still on dollar, but I'm trying to cover as many time frames as I can. So, back to the 15 minutes. That was an immediate support, double bottom, let's call it. It's not exactly double bottom, but it was retested 2 times. So, and it was largely broken. We have another 3 minutes until this candle close. So that would be indicative in 2 minutes, actually 2 minutes left. As soon as this 15 minutes candle close, we can have some clarity whether there is further room on the downside or not. However, all my indicators over here, high Kanashi parabolic SAR, MACD, everything point to a bearish outlook in the short term and in the medium term as well. What's now the question for any scalpers? Because I know that you're not everyone over here is not scalper. Some people are a 1 hour trader, 4 hour trader, and that's okay. For scalpers, the way that this candle will close can indicate whether it's time to consolidate a bit, just to because it's oversold, just to consolidate a bit before another attempt on the downside. Okay, on the downside. So I would like though to see the news as well. Oh my god, a lot of questions. A lot of questions. Oh my god. Wait. Let's get back to gold. Do you want me? Yes, I think you want me to go back to gold, which is on the upside. Here's my Heikenashi. The double top has not been breached yet, but momentum is quite nice and strong. There is a bearish sign from my stochastics, but I repeat, I am in a 50 minutes chart, so this any correction and any consolidation is just because the asset has been already over bought and it needs a correction before another attempt on the upside, because everything else points on the upside. So we have a nice bullish signals for every single indicator that I have used, and also the key signal is the fundamentals, obviously. So I'm gonna go through the questions though. I don't want to leave anyone. Trading is a business. Exactly. Well said, connected empire. Trading is a business. Treat as such. So have a plan, like a business plan. Plan specific steps that you're following every single day. Specific strategy and follow it. Don't amend it just because you feel stressed or something. Strategy, trading plan, keep a journal, write down key support and resistance levels, put some alerts, some reminders. If you want to become a serious trader and a successful trader eventually, you need to act as Connected Empire said, trading like a business. Okay. So is the buy price at the peak for gold sales? Not quite sure that I understand the question. Let me repeat. Let me check again. Is the buy price at the peak for gold sales? Sorry, dear. Say, can you rephrase it somehow? I cannot get the question. Sorry. I'll wait for your. Thank you very much, Jay. I'm glad that you're happy. Anything you need, we are here. Double trouble, yeah. But that's adding volatility, and this is what we want, right? Yeah. Okay. I can see a lot of happy people here. Eggs. Oh, well said. You guys should remember, one mistake will make you lose what you don't expect. Well said. Well said. Let me see. What do you mean? Correction, bearish, consolidating a bit there. You're referring to the short term. This is the 1 minute chart. Okay, this is the 1 minute chart. Okay, it depends in which time frame you're trading. What's your strategy? I mean, whether you are on 1 hour, 1 minute trader, or 1 hour trader, or 15 minutes trader, etc. This What we are seeing this in the 1 minute, this is the 1 minute, is just a correction. It's not a pullback, it's just a correction. And I think it's already over, because this is the 1 minute, I repeat, already over, repeated support. So this gives the impression that it has already, it was limited as it was expected, already over, and that we're gonna have another attempt on the upside. You can see that we are getting also a bullish, signal from stochastics. This is my stochastic. Can you see that? Yeah. So yeah, that's 1 minute chart. We need corrections. I mean, the markets don't go like one side only. I mean, if we hit extreme levels, I'll just overput or oversold. We need a correction before another attempt on the upside, because some people are cashing out their money and enter the market again, which is, I mean, this is how markets work. So I'm gonna go back. 15 minutes chart. The candle closed earlier, bullishly, no tail at the top. Still positive signs from gold. How does this affect the NASDAQ? I mentioned it earlier at the very beginning of my live. I'm gonna jump right now on NASDAQ. Where's my S&P 500? But we need NASDAQ. We need NASDAQ. Here we go. This is NASDAQ. Theoretically, the weakness in labor market, because it implies to further rate cuts from the Fed, this should be positive for NASDAQ, because it's positive for the big tech companies, for the corporate sector as such. You might not see, okay, we haven't seen really a lot of volatility the last like 20 minutes to NASDAQ. We have seen more mainly on dollar and gold, okay? But overall, this should support NASDAQ, my dear friend. Don't forget, though, that we had the last few days, we had a lot of sell-offs in the tech sector. That's why we have seen in general this decline for 3 days in a row. However, the data support NASDAQ. So it's better for you to rely on what you see. Okay, what I mean by that, because we have factors contradicting. Okay, positive bullish factors is the NFP today. Bearish factor is the sell-off in tech stocks that we have seen the whole week, and the uncertainty, basically the concern. What happened, guys? You know, the big companies for how many, for 2 years now, I don't quite remember, but the big tech companies have invested massively on AI. Okay, they have invested billions. However, it seems that, and there is the concern that all this investment will not bring back the necessary and sufficient, let's say, returns, payoffs to this company. And this is why we have seen the sell-off the last 2-3 days, actually since Friday. Okay, concerns around the fact that all this all this investment in AI will not pay back. Okay, that's why we had Oracle declining, Nvidia declining massively. Actually, Broadcom. There were a lot of, in general, the AI sector. Okay, so what I'm trying to say, my dear friend, who asked about NASDAQ? sorry. Pirates Steve. Steve, basically, Steve. So what I'm trying to say is, Steve, fundamentals, the US economic data, NFP that we've seen today, for the time being support NASDAQ. Okay, so they support NASDAQ. On the flip side, though, we need to keep an eye on any corporate news coming from Wall Street because of the of what I said, the uncertainty around whether the AI will actually return any profits or not. So we have contradicting factors, both squeezing and supporting the market. That's why I said it's better for you to trade what you see and not what you think. So rely on your technicals, identify your support and resistance levels, identify in every single time frame just to be on top of everything. So immediate support and resistance levels is the 25,300, which also it's a repeated ceiling back in October. And obviously the very next ceiling is on the 20, somewhere here, 25,700, 77, 0. On the downside, a break of the, of the 24,800 could open the doors to 94,300, or even that's very important, very important support level, 2400s, 24,000, sorry, 24,000. But to get some clarity, let's say, whether the asset could retest 24,000, we need to see today's candle and actually tomorrow's candle as well, extending below the mid. So extending further below 25,000. It needs to reject 25,000. Currently is flirting with 25,000. It's finding some support because of the conflicting, as I said, factors. On one side, supporting NASDAQ. On the other side, we have AI news that weighed on the NASDAQ. So rely on what you see. If you are a day trader, okay, we have find together the daily support and resistance levels. So any breakout could lead you on the next move. But if you are intraday trader, 1 hour, 30 minutes, again, rely on what you see. Currently, this is a 30 minutes chart for NASDAQ. We see that it started, a pullback has started. And from how weak this candle are, small body candle, I can see that there is still uncertainty. There is uncertainty. So consolidation is what I see right now for 30 minutes chart, 1 hour chart, etc. So yeah. Yeah, they don't, the markets have not reacted massively on a stock market, and I'm suspecting, without being sure, the reason is mainly the AI. But I have I saw somewhere, where was it? I don't remember that. Maybe I will find it. Never mind, I will find it. Let you know exactly. I have seen some news related to S&P 500, but I want to find it before I say anything. So let's move on. Let's see the next question. Tapang bought at 42.77 for gold, obviously. Let's see, my dear friend. for gold. By the way, silver is also very, very interesting. Very, very interesting. Uh, yeah. Ooh, at 200, at my 200 period moving average over here, 43.11. AO, the Osmo oscillator already, I mean, it's keep like increasing positively, but bullishly, basically. RSI keeps pointing for on the upside, indicating that there is further room on the upside. Stochastic the same, you see, it failed to return back below 80 and is pointing on the left hand side. It's on the right hand side. Sorry, that indicates that there is it gonna remains above 80 for a while. MACD as well, turn positive. So, 42. Well done, Tabang. I think you're celebrating right now. Don't get greedy. Follow your strategy, okay? I guess you have already placed targets, multiple targets, or at least one target, and your stop. Don't get greedy. Yeah, well said. Well said, connected empire. Well said. Yes, Nico, well said. Why dollar yen is bullish? So, oh, wait, before I move to dollar yen, this is gold still just closed above my 200 exponential moving average. Big body candle, bullish candle without any tail at the top, indicating that bulls are in control, guys. Okay, it's a bit of a bot. Okay, so we may see some consolidation, but consolidation is just a correction before another attempt on the upside. However, everything points to further room on the upside or further rally. I mean, also oscillator suggests that. Mark D suggests that. My moving average are all pointing upwards. Expanded Bollinger Bands as well. It's bullish. RSI the same. Stochastic the same. If I flip to the Heikenashi version of um, my chart, also look at let me find it. Where is it? What is my Heikenashi version? Okay, I cannot find it right now. I'm gonna quickly turn it. There's no. Here we go. Okay, ignore this slide. Let me just get rid of this object because it's an old one. What is it? Rectangle. Is it? Sorry for that. Oh, no. What's this? Regression channel. Here we go. Okay. Okay. So I was where I was 15 minutes chart, 30 minutes chart. Here we are. Bullish, 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 bullish. No tail at the bottom. Bullish parabolic star. All moving average pointing on the upside. Crystal clear. Crystal clear. So I'm gonna jump into dollar yen. Benedict asked about dollar yen, and you're saying dollar yen, why bullish? So let me put the 30 minutes chart just to see what you're saying. Okay, dear, this bullishness that sustained for 15 to 30 minutes, 15 minutes actually was, because this is quite dodgy. This is quite dodgy. So the only big candle that was bullish, it was this one. So this was just how can I say, how can I that was, if I am correct, 15 minutes prior the data or during the data. It was during the data. This is a poor market noise. Is what I have done in the past. I don't know whether it's in our YouTube channel, in HFM YouTube channel. Okay. As I said, however, and I repeated in this once we were live, that always have in mind that the very first 15 minutes of the NFP is just market noise. is not a clear direction. This is what it is. It's just a poor price action. Sorry, market noise. Sorry. But um, okay, obviously the data, as I said, weighed on dollars, so we should see a yen gaining ground against US dollar. But, 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 we have, other than inflation on Thursday, we have also the Bank of Japan on Friday. And and what we're expecting basically is to see them hiking. If we're not hiking, stating at least that they're gonna hike, they're gonna increase rates, which is something that should be positive, bullish for yen. So for our asset, for our cross, for dollar yen, that means a bullish yen means that dollar yen should go down. Okay? So I'm gonna zoom out to the daily chart. Sorry. Okay. And remind you, these are lines that I had from my previous live analysis. Remind you that we have been on the sideways, we have been in a range market the whole November and December. And today, it retests once again the 154.50 floor. This is a very important support level, guys, because if it breaks, it could take dollar yen up to 152, even lower, but slowly, one step at a time. Simply because of the yield differentials. If the one bank is tightening and the other one is easing and the other one is tightening, if the one bank is cutting interest rates and the other one is increasing interest rates, it goes without saying that the one currency will be depreciated and the other currency will be appreciated. Fundamentals, and if indeed a Bank of Japan delivers on Friday a rate hike, or at least a really hawkish statement, because we have seen many hawkish statements from them in the last comments, even on Monday last week as well, with Mr. Weda, etc. So this should push dollar yen further lower, not higher, lower, which because it will mean strong yen against a weak dollar. Now, I'm gonna now zoom into the 30 minutes chart. Clear uncertainty, clear indecision. So don't take this candle for granted. This candle is doji. Long tail at the bottom, long tail at the top is not help us. It doesn't help us to identify the direction of dollar yen intraday. Okay, so wait to see clarity. Wait to see whether it will be supported above first support of the day or whether this was limited before another attempt on the downside. Be a bit patient because we're getting mixed signals from dollar yen right now. But what I can say is that fundamentals support a bearish dollar yen. Okay? But the technical, the chart, it looks a consolidation intraday. We need clarity. We need to see. Yeah. So let me go to the next question. Where is it? I've lost. Wait. Dollar yen. Why? No, it's bearish, not bullish. Okay. I know that, Nico, you're probably seeing, I don't know, 1 minute charts. Don't try to explain 1 minute chart, 5 minute chart with fundamentals, neither with the actual direction of another asset. Okay, right now it's just a correction. It's not so they basically there is a ceiling over here at 154.85, but this is a 1 minute chart. I repeat, okay, 1 minute chart. In the 1 minute chart, it's just it's just it's just that you need to rely on the technicals. Okay, there is a ceiling 154.85. That's the very next resistance in the 1 minute chart. But yeah, overall, this doesn't. It's not expected to be sustained, so it could easily correct it and revert. It depends. I know that you're probably 1 minute trader or something, but and that's good for you if you're successful to it and you have find strategy that satisfy your mentality, your psychology, your style. Good for you. Ah, let's go. Well done. Okay. Buy gold. Don't buy gold. Things. Okay. Shall I jump back to gold again? I don't know what else we should analyze for gold. I mean, I would like to see what people are trading. I mean, obviously you're trading gold, but which time frame? Are you using Heikinashi? No, that would be interesting to see the time frames that each one of you trades. I mean, yeah, or at least where you rely your decision. Are you relying your decision in 1 minute, 5 minutes chart, 15 minutes chart? I mean, that would be very interesting because I can see contradicting comments. Like someone says gold sell, someone says gold buy. So I can see that we have many different type of gold traders over here, many different strategies over here, which is nice. It's nice. It's enlightful. So double top has already broken. Already broken. So I'm gonna go back. Someone asked about cable. Yeah, I'm gonna cover cable. You know what? Yeah, I'm gonna cover cable. Someone asked about cable, and I would like to cover cable. We can come to gold later on because we have already covered it, actually. There's nothing else to say. Gold, gold, gold. Oh, time flies. I didn't realize that we're over here for an hour. Okay, cable. Hey, 30 minutes chart. It was in a rally until actually the whole day, the whole European session. But prior data, we've seen a pullback. Okay. But this pullback, my dear friends, is not expected to be sustained. It looks like a correction before another attempt on the upside for cable. Okay, so oops, sorry, my coffee. Gonna take a sip. So, my dear friends, as you can see from my pivot point analysis, like hovering around the second resistance of the day, 134.25. Candles are small. So yeah, this looks a limited pullback. So yeah, limited pullback. Let me just 5 minutes. Yeah, that's the 5 minutes in cable again. Nice support around like 94, 30, 134, 134.10. Supported, and yeah, it's just a correction of this rally that we have seen since the whole day. Okay, it's just a correction before the continuation of the uptrend. It's actually it's something to keep an eye on. Okay, obviously we're in a 5-minute chart, but this looks like for the time being we have seen the asset retesting 134.10 territory twice. This territory, okay? It used to be resistance, converted into support once, converted to support twice, and rebounded. So that's interesting because it might help us later on confirming either the rebound or any potential breakout. But yeah, that's a short-lived correction, it seems. Cable in general is well supported the whole day, the whole month, the whole November as well. If I put the daily chart, it has been on the upside the last 2 months, supported by weakness of dollar and strong pound, not because of a strong pound, but mainly from the yield differentials and from the central banks, for the central banks actually. So yeah, we have Bank of England as well this week, guys. So, and what is expected is that they will cut interest rates indeed, okay? So that theoretically should be negative for gold, for pound. However, they have a yield differential from the Fed. Every currency pair, pound, dollar, dollar, yen, euro, dollar, etc., represents the difference of one country to the other, the difference of one bank to the other. So it's like we're comparing the two, the Bank of England with Fed, the Fed with Bank of Japan. So even though the Bank of England is expected to cut interest rates, okay, the thing is, sorry. The thing, however, is that the Bank of England interest rates right now is at, where it's basically, let me double check. It's at 370. It's at 4%. The interest rates are 4%. Okay. While U.S. rate, the U.S. rate. Sorry, I forgot. Oh my God. 375. So it's already lower. But the thing here is that the Fed is expected to cut at least 2 to 3 times the first quarter of the new year. While for the Bank of England, the expectations are that this might be the last time. So that's why the cable is being supported in comparison with the Fed. Okay, so yeah, so let's wait and see. But yeah, there is a nice channel that you can use just to track your cable. Okay, has been in a channel. Let me just correct a bit. It has been in a channel the whole November and December. Yeah, above first and second resistance of the day, keeps pointing higher. RSI above 50. So yeah, just this correction the last hour looks limited as long as it remains above 134.10. If it extends, if we have an hourly candle closing below 134.10, then we could see the asset returning back to pivot point, which is at 133.75. However, there is not enough momentum for something like that. Okay, there's not enough momentum, neither the slope of the moving averages, neither the slope of stochastic. Stochastic in this is bearish, but the slope is not like aggressive. RSI the same. It's just pointing on the right hand side. Let me see, do you have any questions? And plus, something that I forgot to mention is that we also had some data out from UK as well that basically affected today the performance of cable, even though the focus, as I repeatedly said, is on the US, for NFP, for inflation, for everything. But we had some data, we had labor data, actually employment data from UK today, early in the morning, that basically show a steady unemployment rate, increase on the average hourly earnings. Okay, so it was a much better, let's say, report than the US ones. That's why that might be also the reason why it got a bit, I mean, cable was a bit supported. Yeah. So guys, last calling for question, final calling for questions, because I am already live for more than an hour. I'm quite exhausted. So final call for questions. But yeah, the UK data today, more precisely the wages growth, the earnings growth. We have seen growth in the UK for earnings, but we have seen decline in earnings in US. And this is actually the key difference. And this is why we probably have seen this reaction for cable, this bullish reaction in cable, even prior to the NFP. And that's why I mentioned that this decline over here, the last hour, is expected to be limited. So yeah. Questions. Euro dollar, very similar reaction. That's okay. I put Heikenashi just to change a bit the template. On the upside, a breakout of our like double top over here at 117.70 territory. Let's round it up. Sorry. Here we go. Somewhere here. Come on. Here. Perfect. Broken. It's just yeah, bullish momentum. Everything points in a positive, in a bullish euro dollar. This to me, this is a daily chart. You see, consolidation for months now, but we are again at the ceiling, retesting the top of the range. So be very careful, okay? Because this could be a nice warning, premature signal for a return back to 118, 119 territory, okay? This is the euro dollar, okay? Euro dollar, bullish. There is okay, I don't see any further questions. We have already covered gold. We have already covered euro dollar, cable, dollar yen, NASDAQ, S&P 500. So I would like to thank you for being here. Hopefully this live was helpful for you. If not, please give me feedback. It will be more than appreciated. I would like to see feedback. I would like to let me know what we could do better in order to help you. Yeah, that was pretty much it from my side, guys. Take care. I mean, the week is not over. NFP is out of the way, but we have inflation, we have Bank of Japan, we have Bank of England, we have the ECB. Sorry, I forgot to mention ECB. The agenda is packed, absolutely packed. So we have inflation from UK, a very, very important and crucial week. So a lot of volatility is expected, more volatility is expected. Yeah, so take care. Take care. Thank you very much. Have a great day ahead. Take care. Anything you need, we are here to help with me, Michalis, my colleague, in general, our team. Don't hesitate. Okay, don't hesitate. Thank you very much. Have a great day ahead. Take care. Bye bye.